On the one hand, people complain, I don't like the hyper-financialization, I don't like the inflation. But then on the other hand,
is it going to be one big explosion of exponential debt spiral? Is that the way that this plays out?
it just is math.
I love math.
He's the maverick of modern finance, co-founder of BitMEX, former Wall Street trader turned crypto visionary, and one of the most influential voices in digital markets today. Known for his bold takes, deep macro insights, and unfiltered commentary, Arthur Hayes doesn't just predict the future of finance, he helps shape it.
I think it's really shit for a lot of people, right?
Welcome back to the Rollup.
This is your home to learn from the biggest guests, the brightest minds at the tip of innovation.
Our goal is to help spread the collective knowledge of everyone in our community.
We are breaking crypto out of its echo chamber and taking it to the real world.
Sit back, relax, and enjoy it.
Have you seen 6-7?
No.
The meme?
No.
All right, so when I initially saw 4-7, there's this Zoomer brain rot meme going on.
Okay.
It's 6-7, and it's like there's really no explanation behind it. It's really just a funny thing that like random kids are doing. And so that wasn't the intention behind the name 4-7 for your piece. Okay, all right. So after reading through, I realized that actually 4-7 is the best hand in presidential poker.
Yeah.
So maybe you could explain why this is the case. Why 4-7 is the best hand in president poker.
Yeah, in the United States, the Federal Reserve, there's two boards that determine monetary policy. There's a Fed Board of Governors. There's 7 members on this board. All are presidential appointees confirmed by the Senate, and simple majority wins. So you need 4 votes out of 7 to control that board. What does this board do? It controls the rate at which banks earn interest on their excess reserves. It controls who gets to lead the different 12 Fed district banks. And it also controls certain banking regulations. And so with control of this board, Trump can take control of the short end of the yield curve by doing some funky things with the rate at which interest is paid to banks and the discount window. He can also have influence on the other 7 members of the Federal Open Market Committee in every year that ended in 1 and a 5. So 2026 in February, all 12 district bank presidents are up for re-election. The person who the bank boards elect must be approved by the Board of Governors. And so if Trump controls this board with 4 votes, then he could essentially pack the FOMC with people who agree with his monetary policy. Yep. With the FOMC, you need 7 out of 12 votes to control that board. And it controls the rate at which the Fed either contracts or expands its balance sheet, called the System Open Market Account. And that's really the most important thing the Fed funds rate. Those are the 2 biggest things.
And the simple open market account, this is effectively the quantitative easing.
Yeah, the balance sheet.
Yeah. Okay. And so by having 4 in the reserve, the governors, and 7 of the FOMC, you're effectively controlling the central bank.
Correct.
Okay. And so he can enact monetary policy to his wish, which and we understand his wishes is effectively to pump the brakes out of the market and win the midterm elections, to continue winning Wall Street, winning Main Street, and pushing his agenda.
Correct.
Okay. And so when you're writing through and learning and sort of understanding the situation that is unfolding at the presidential level and the monetary policy level, and then you're starting to equate that to what it means for your bags, our bags, I think you put it quite succinctly in your piece: remain long as fuck. So how do you see the monetary policy once Trump has control of it? How do you see that shifting into the on-chain landscape? How do you see that affecting your bags and our bags?
Our bags perform well when there's more fiat created. And we have a small asset. It's fixed supply asset, Bitcoin, and obviously there's other cryptos. Fixed supply asset, we have this gargantuan amount of fiat that has been created and will be created. The faster that goes, the more people run to Bitcoin and crypto. And so if everyone believes that, okay, Trump's got control, you listen to what Buffalo Bill Besson says on television and in the print, and he talks about how they want to revitalize America and they want mortgage rates to come down, and everybody gets a house, everybody gets a car, everybody's got a good, nice job, all these things, but no one pays any more taxes. So everybody's got this new amazing life that they didn't have to pay for because there's magic money coming out of the sky, provided by the Federal Reserve and the U.S. Treasury. Then our job as investors is, okay, well, we know that if you earn a salary, you're fucked, right? You're just going to not make ends meet. So then what do we have to do? We have to find a way to get some sort of financial asset. And previously it was like gold and stocks, right? Before crypto. Now we have crypto, which has been the best performing asset class, Bitcoin, I'm talking about, in human history. When you talk about the amount of fiat that's been created since 2009. So, okay, I need to save some fiat. I need to buy some crypto. Hopefully it goes up as there's more fiat created. I know that my salary is not going to go up as fast as dollars, yen, euro, yuan are printed, and that's sort of the game at the end of the day of what we're trying to do.
You previously had put out this piece on Hyperliquid, and there's a lot to get into with Hyperliquid, but specifically you laid out a valuation heuristic for Hyperliquid based on the influx of stablecoins into the supply. And you said, look, Buffalo Bill Besant is poised to print $3 trillion, put $3 trillion into stablecoins. And that is going to equate to this 126x multiple of Hyperliquid, because more stablecoins means more volume, means more revenue, means more buybacks. How do you, and so it's a lot of it's a lot of math to really walk through that. Do you think the issuance of stablecoins is going to lead to, and stay and work its way into DeFi? I guess that's really the question, is what is the venue in which these stablecoins ultimately land, and which sectors of the on-chain economy are poised to be the most successful as a result of the influx of stablecoins?
I think once you have a stablecoin and now you've got a dollar bank account, if you're not an American, now you got a dollar bank account. What do? Okay, well, I want to earn Fed funds, whatever it is, 3, 4, 5%, whatever it ends up being. Okay, I've done that. Okay, cool. All right, so more inflation. Got to do something else. All right, so what else can I do? Oh, there's this thing called Athena. It's an endogenous yield in crypto. It's usually about 2 to 3x, which you get in treasuries. Okay, cool. I can make it 10, 15%. All right, what's next? Oh, I want to go, buy coffee at 7-Eleven. Oh, we'll take your stable coin and we'll let you spend it offline and using Ether.fi and other solutions. Okay, cool. All right, well, I'm still broke as fuck. I'm making 10% on my money. That's great. I'm making better than the bank. I'm not getting depreciated like I was in Argentinian peso or something like that. I've done well, but I need still to make more money. Okay, I'm going to speculate. So now I'm going to go to Hyperliquid or whoever the dominant DEX is at the time, and I'm going to trade, I don't know, dog with hat, Pepe coin, Bitcoin, whatever the fuck I want to trade. I'm going to speculate on everything with high leverage because it's the only way that I can escape this drudgery that is working for a fixed salary that doesn't increase as fast as the amount of money that's being printed. And so I think that's what, this very sad situation that the world is in, but this is where anyone who doesn't have financial assets finds themselves is, okay, the only way out is to speculate. And now I have this new way of speculating that's outside of the stock market, which, is intrinsically rigged against me. You might say crypto's rigged against you as well, but I say that there's more opportunity to trade whatever you want, however you want in the crypto space versus in the domestic stock markets around the world. And so now people can say, okay, I've got these stable coins. I literally just connect my wallet and now I have this whole, ecosystem in front of me where I can trade these things. I can lend these things. I can borrow against these things. I do all these different things and hopefully outpace this inflation that's being generated by the powers that be.
Let's just dig into Hyperliquid a little bit, and there's plenty more that we can talk about as well. So Hyperliquid, you were a big bull, big Jeff bull on Hyperliquid, ran up, you were part of that whole run, and then sold off and actually front ran a lot of the Aster shenanigans that kind of started to pop up with CZ supporting Aster. And so I imagine made quite well on that trade. When you sold Hype, and you outlined why you did that with unlocks that are coming up. When you sold Hype, did you buy Aster?
No.
Okay. Do you see the rise of perps and perp dexes as competitive to Hype long term, or do you see, I guess, just to make this a real simple question, will you buy back Hype?
We'll see how they perform against this low to no fee competition, and what is the multiple that the industry, the ecosystem is going to give on their future revenues, right? Because people love Hype because they know that Hype makes money and therefore they buy back their token. Well, I'm assuming that CZ is backing Aster. You tell me, you're probably more Louise in this than I am. Let's assume he is, right?
Yeah, he's an advisor.
Why? Why would he do that, right? Well, Hyperliquid, the more successful Hyperliquid gets, the less successful Binance is. So Binance makes so much money. And so they say, okay, well, you only exist because you give 97% of your revenue back. So let me take your revenue to zero, see how, adamant your community is to use this solution versus mine that's zero fee. We're offering the same product. It's not like there's not that much difference in the perp decks. Yeah, you could say the latency is this or that, but retail people don't give a fuck. I give you Zia free. I give you a new shiny token to trade in the BNB ecosystem. Look at what I've done to all these other shit coins, regardless of whether they're value or not. And so, okay, hat over to you, Hyperliquid. What are you going to do now that you have no revenue anymore? What's the new thing that you're going to be able to charge somebody for when I'm just going to give this away for free? Because I don't care if Astro makes any money or not. I just want I want my Binance to stay very, very profitable. So I think, again, I don't know how or if they're going to overcome this. I just see that there's a North Star. There's going to be all these stable coins. There's going to be all these traders. Whoever's still around in the next 2 to 3 years, they're going to kill it.
Yeah.
But you got to make it through this trough of making no money.
Right.
The wait is over. The Talus testnet is live. Be part of the revolution. Join now at testnet.talus.network.
Hibachi.
Provable. Trade perps with speed and security. Earn rewards. Visit hibachi.xyz. Trading on fire.
The future runs on intelligence. Creativity, engineering, health, money, productivity. AI promised utopia, but delivered only hype. Black box models and zero accountability. With tons of tools claiming to be the best, how do you know what's real? Introducing Recall Find. Top models ranked by transparent reputation from researchers, users, and developers. Test AI skills, curate favorites, and compete to see what works. Don't guess what's good, recall it.
That reminds me of this concept called commoditize the complement. I forget the origin, but the essence of this is effectively, look, Binance, and to your point, CZ has this juggernaut in Binance, and so he sees this competition coming from the DEX space. Well, if you can make the DEX space really, really cheap, you effectively cut out Hyperliquid's legs from under him and protect his golden goose in Binance. And so that's effectively the strategy that it sounds like CZ is employing with Aster. Okay, so you also were running BitMEX, and so you have deep experience in the perp deck space. Do you think where do you think this landscape is headed as far as, do you generally see perpetuals as this 0 to 1, we're going to integrate into traditional finances? This is going to be one of the more, it already is in crypto, but one of the most popular venues to be trading and have price discovery?
I think because traders want leverage, and in traditional finance, it's very difficult to get high leverage. I'm not a big trader in TradFi, but listening to people talk about, like, I think in the US there's something called a pattern day trader. You trade too much, your brokers, you're a pattern day trader, so they shut you off, right? Okay. So you do all these different things. You're not breaking any laws or anything. You get less access to leverage, and around the world, certain regulators don't like you to have leverage. So then you're forced to do these like 0-day options and all these other funky strategies, which are essentially, you're just handing value to the market makers and to the large banks, because the product that you really want is it's a very highly leveraged, what we call the delta one. So like you make 1% in your money versus a 1% move in the price of the asset. You just want to have leverage on that. So the perpetual is this perfect way where the exchange can operate these socialized loss mechanisms. The customer understands that at a certain price, I might not get the full payout because the exchange doesn't have enough money to cover all the levered bets they have. I accept that as a cost, but in return, I get this instrument that lets me bet with high amounts of leverage on anything that I want to trade.
Okay.
And I think that is revolutionary for a retail trader versus what's in TradFi, which this isn't the way it's operated for various reasons, and that's why I think it's a 0 to 1 moment. Okay, retail gets what they want. They want highly leveraged trading. They don't want to trade 0-day options and all this other funky stuff. They just want plain vanilla. Give me a futures contract, delta 1 exposure, and give me high leverage. And this perpetual thing makes a lot of sense because it looks like I'm trading on margin, and I understand margin trading.
Yeah, and generally we're encroaching on this hyper-financialized world where more and more people are taking control of their own money, and they're also taking control of what they're doing with that money, not just saving it. They realize what you were describing with high inflation, and they're putting it to work, and they're trying to make more with their money. And so what you're saying, you're describing this world where people do this and they want leverage and they're continuing down this track. What do you, just in general, zooming out just for one moment, like, what do you think of this hyper-financialized world? What do you think this is beneficial for society as a whole?
I think it's really shit for a lot of people, right? But I think on the one hand, people complain, I don't like the hyper-financialization, I don't like the inflation. But then on the other hand, they're apathetic politically. They don't. They show up and they vote for the same guys and gals who are fucking them every single election, or they support a particular authoritarian leader or whatever it is that is operating in a fractionalized system. So, on one hand, it's not really great that everyone's turned into a speculator because their salary is not keeping up with inflation. But on the other hand, you have to take responsibility. We as the people saying, okay, well, if we don't like this, then let's run all these people out of power and let's have a new, more equitable system, which isn't based on inflating fiat assets.
I don't even know what that system would be.
I don't know what it is either, but
like you've talked about that is the only function of government, is to print the money.
That's it.
You mentioned a couple other projects that you've invested in at Maelstrom. Ether.fi we've also invested in on our fund. We also have seen the rise of other neobanks like Plasma. So when you're looking at the neobank category, do you think it's crowded? Do you think Ether.fi and Plasma, can these all coexist and do quite well together? Or do you think this is a winner take all or winner take most market?
I mean, there's however many thousands of banks out there, so I don't think it's a winner take all market yet. Okay. I think there's lots of space to experiment in, like, with distribution methods, the type of products that you want to offer, the type of customer service that you want to offer, which segment of society are you going after? So it's an open field right now, and I think there's going to be a lot of successful companies in this space because this is the first time in which it's able to run a profitable crypto neobank where I can actually spend my money offline.
To the point you made earlier, there's plenty of functions that these neobanks can now tap into, and they can offer that retail audience. I want to kind of circle back to one of the original points about the 4-7, Trump cooking the Fed, literally with Lisa Cook. And you kind of walked through how, in order to get 4 is going to pave the way to 7, but ultimately you need 4, and you have 2 out of the 4 that dissented in this last meeting, and then you have 1 that unexpectedly resigned. And so now it's kind of all down to Lisa Cook. And if she is removed, then it paves the way for Trump to introduce the 4th out of this 7. So you have outlined this growth of stablecoins and how that translates to higher crypto asset prices in the long run. 2027, I heard you talking on stage, and 2028, there's lots of things that are expected. But thinking a little bit more about the near term, what do you think is the timeline for Lisa Cook to get cooked and for Trump to take control of monetary policy in the U.S.?
I think it's before the end of the year. I think the pressure will intensify on her. I think I don't know the timeline. I think there's a Supreme Court decision of whether or not she has to resign in advance of this court case that she has to fight, assuming the DOJ charges her with mortgage or some sort of bank fraud. Okay. Right? So I don't know when that decision is. I think it's imminent, but I imagine that there is a political calculus, and at some point, whether she's guilty or innocent is irrelevant at this point. This is all politics.
Yeah.
What is she going to get promised in the back end to sort of step down and exit stage left?
And so once that happens, and once Trump has 4 out of 7, and then ultimately he can put 7 out of 12 on the FOMC, you outlined, look, there's things like lowering the interest on banking reserves. There's things with the discount window. There's things with deregulation. What is the path? Like, what do you think is the domino effect for each of those things to take place? And is there a timeline, or can Trump sign an executive order? How do these things get enacted once he has control of the Federal Board of Governors and the FOMC?
So in the 1940s, obviously the U.S. entered a war. Pretty much overnight, the Fed said, okay, we're going to lower rates to 0.3% on the T-bill. We're going to cap rate to 2.5%. So again, a politician can declare exigent circumstances for whatever reason, right? And so there's so many things that Trump and Bessie could use as an excuse for America being at risk, and therefore the Fed is justified in combining with the Treasury and fixing the money supply and doing all these things, right? So, whatever war they want to pull out of their hat or whatever crisis they want to create, they're politicians. This is what they do. So I don't think it's that difficult. You can see the votes, and then it's just a rubber stamp.
And so what they're going to do is they're going to steepen the yield curve. And so steepening the yield curve is going to bring the near end down. And would it push the long tail of the yield curve up as well?
It's a bull steepening. So yes, the yield curve steepens, but every rate declines from where it is currently.
I see. And so they're going to do that in order for some of the regional banks to start to deploy more money and loans into the heart of of America. They're going to prioritize Main Street over Wall Street effectively. And so once they start to move credit and credit creation and economic growth out of the hands of the Fed and put it more into these regional banks. That is where the money supply is going to stem from. Is it going to take longer for money to ultimately make its way through the supply and ultimately land itself into the hands of hard assets? Or I guess what I'm asking here is, like, when money's moving through the system, and right now it's being printed at the Fed, that's kind of this one scenario. The other scenario is getting printed at regional banks. How do those two different scenarios, how does money move differently in those two scenarios?
So with the Fed, money moves basically through the large money center banks to financial players or large corporates, right, who have access to institutional corporate debt markets, or a private equity firm who has the ability to borrow to lever up an existing cash flow stream. So no new cash flow streams are created. I just have access to credit from the Fed and the banking system, and therefore I'm going to lever up an existing cash flow stream. So no one new gets hired, no new economic growth, nothing like that. So the money multiplier is very, very low. The average person doesn't receive any credit. But in this situation, I call it QE for poor people, when the regional bank is lending to a SME or an industrial firm, right? They're creating this new loan, creates a new business. They're going to build a new factory or start a new product line. They need to hire more workers. Those workers get paid. Those payments go into the banking system. And so the money multiplier is ultimately higher. Nominal GDP grows faster, and obviously inflation grows along with it. And so you get a faster expansion in the money supply. You get a faster expansion in economic growth, and you get a faster acceleration of inflation, and that's what drives assets higher. And so, but from the government perspective, their debt to GDP declines,
right,
which is what it did from 2020 to 2022 when Trump and Biden did this policy for a little bit.
Blockchain shortcuts, templates, and widgets launch without friction for builders by builders. Visit enso.build.
Relay, low fees, lightning speed, and the power of multi-chain at your fingertips. Instant multi-chain payments. Choose any token on any chain. 75 plus networks supported. More than 5 million users. 8 billion plus volume processed. 70 million plus transactions. Fast, reliable, everywhere. Start swapping today. Only on Relay.
And this is effectively the Ray Dalio and I think Besson as well have put this 3-3-3 model out there, where they want to get debt to GDP down to 3%. They want to get GDP increase to 3% or more, which I think is already there. And then they want to get there was one other 3%.
Oil or something, I remember. I don't remember what it was.
What's your take on, do you think this is ultimately healthy for the American economy to be going and doing yield curve control and putting more lifeblood into the heart of America and more into these regional banks? Is this ultimately healthy for the American empire, or do you think they're just perpetuating the system? It
depends on who you are, right? So if you are a person who's going to benefit financially, asset-wise in this scenario, this is great for you, this situation. If you are someone whose salary is not going to keep up with the inflation that's generated by running the economy hot, then this is a terrible situation for you. So I guess it's depends on who you are, what kind of assets that you have. But in general, if you take a look at China and some of the North Asian countries who've run a similar sort of policy, the real after savings earnings of the savers who put their money in the domestic banking system vastly underperform the growth in the economy. And so, that's why you have the central banks with trillions of dollars of quote unquote savings. That's the wealth of the people that they didn't allow them to spend. And so depends on where you fall on this sort of the common good versus the individual and all those sort of philosophical points of whether you think this is a good thing or a bad thing.
I see. And this, I wanted to also cover something that you put at the very beginning of your 4-7 piece, which was Buffalo Bill Besson's plan to reindustrialize America and attempt to forestall the inevitable decline of Pax Americana from a quasi-empire into a purely powerful nation state is nothing new. The inevitable decline of Pax Americana is something that caught my attention. Why do you think it's inevitable, the decline of the American empire?
Because it's based on a gross imbalance, right? If you look at Germany and France, essentially were political creations of the United States after World War II, who have grown extremely wealthy by being able to export their goods that were financed by America initially, not anymore, back to the American market, but American firms cannot sell their goods essentially in those markets. And so obviously this system creates a lot of gross inequality on both sides, and that's gonna, it's gonna change. And only it's just gonna go back the other way.
Yeah.
So it's inevitable that the thing that made America great, which was okay, well, everyone blew themselves up, and America had 50% of all manufacturing capacity and everyone wanted to own dollars back in the 1950s and 60s. That can't last forever if you've built up the rest of the world, and so now things have to reverse. So it just is math.
I love math. And so stablecoins as a way of broadening and burgeoning this dollar supremacy, is that not going to continue to bolster America? Like the dollar homogeny that they're spreading to people on the fringes of the world with stablecoins. In my mind, that would say, okay, well, we're going to continue to substantiate and entrench the U.S. dollar into the global financial world. It's going to essentially cement America's place in geopolitics. But you're saying, no, it's inevitable that they're going to just flip and become just another regular nation state. Why do you think stablecoins are not enough to cement America's place in the world?
When you have $35 trillion or whatever, $20 trillion of marketable debt, and you're not growing as fast as your interest payments, then mathematically you cannot escape that. I don't care how many stablecoins you have. Like, great, de-dollarization was slowed. But, if I'm Saudi Arabia or China or Japan or Germany on a net basis, I don't really want to own a treasury. I want to own gold, or I want to invest back in my own country because I have to be accountable for my people for this change in the architecture of trade. Cool. It's great that you got a bunch of poor people around the world to have a dollar, and maybe that's a few trillion more, and they buy some T-bills. But they got to refinance it every 3 to 12 months. Right? It's not the end state that you want to be in. And especially if your debt load is growing faster than your economy, like exponential math doesn't give a fuck about anything else but exponential math.
Yeah. That is math. What is the mechanics of this deteriorization of America as it plays out? How do you see this playing out? Is it going to be one big explosion of exponential debt spiral? Is that the way that this plays out, or is it kind of a slow unwind of the American empire?
Really depends. But at the end of the day, we don't care as crypto holders because we know the math. We know that the debt load will go faster. And what did people do in history? Either they do some sort of debt jubilee. So the American political class could say, okay, we're just going to cancel all the debts. We're not going to pay back to foreigners, but we're not going to pay back people and asset holders as well.
Okay.
There's costs and benefits to doing that. Or we're going to inflate away the debt, right? Run QE for poor people and get the debt to GDP down. That's what they did after World War II. That's also an option. So there's different paths, but at the end of the day, you don't want to own bonds. And if you have the ability, you want to be selling dollars and owning a hard asset like Bitcoin or gold.
Just on gold, right? So another financial engineering point here to escape this debt jubilee. We have a bunch of, hypothetically, supposedly, we have a bunch of gold sitting in Fort Knox that is still valued at like $9 or whatever.
$42.22.
$42.22. Why don't we revalue the gold to erase a lot of our debt?
So, I mean, I guess I read an article this morning, something like the market value of U.S. debt, assuming that it's there, something like $1 trillion. So, the Congress in the United States decided to revalue the gold to whatever it is, $3,800 an ounce. Then there would be $1 trillion deposited with the Treasury, and they could go do whatever the fuck they wanted to do with that money. So that's essentially a devaluation of the dollar. And obviously, you could imagine that there could be a lot of market stress because that's the United States government admitting that the dollar is not really worth this much money. And so if you own a Treasury bond, like a 10-year, 20-year Treasury, what happens to that market? Does the 10-year still trade at like 4.14% or whatever it is today, or does it trade up to like 10%? Or does it cause some market dislocation? So I think there's a lot of unknowns in terms of how the market, specifically the U.S. Treasury market, reacts to the emperor admitting they have no clothes, right? Which is what would happen if you did this massive devaluation. Yes, the Treasury gets this great one-time accounting gain of $1 trillion that they get to spend on different sorts of things, but it's the United States admitting that the dollar is not worth that much.
I see.
And so, again, who knows? Maybe nothing happens, maybe something happens. And I think that's what probably gives Best and Co. pause. This is probably the last option that they'd like to pursue in terms of what they would do with the market. And unfortunately, the United States doesn't mine that much gold. China mines lots of gold. They would love this to happen, right? Because the Chinese people have been loading up on gold since 2008. They're encouraged by the insurance companies, by the banks, to go instead of if you don't want property, you don't want stocks in China. Okay, you can buy some physical gold. And we're okay with that as a Chinese government because it's real wealth to us. And we believe that the United States at some point is going to have to admit that the dollar is a piece of trash and do some sort of massive devaluation. And that massively helps the yuan because the Chinese people have so much gold. So again, there's a lot of geopolitical market questions around doing this. So I think it's a last resort for them.
Got it. Okay. We only have a few minutes left, so I want to get into some of the more exciting things, the price predictions, right? The $3.4 million for one Bitcoin by 2028. So when we're increasing the amount of liquidity in the system, this is ultimately what gives way to this sort of prediction. 2028 is a long way away for a lot of people. You even put yourself out there when it comes to predictions more than really anyone else. So kudos for that. When you're thinking about this in more of the short term, how do you think we're going to get there? What do you think by the end of 25, 26, 27, ultimately to get to 3.4 million by 2028?
So I have no idea what the price is going to do in the short term. I mean, I think I have a $250,000 end of year price target.
Is that still your price target?
I think we could double going into the end of the year. My concern is, okay, well, from a political standpoint, a lot of this depends on Senate confirmation in the United States. And if you look at Stephen Moran, which is the most recent board governor confirmed by the Senate, it was by one vote. So it's very, very tight for Team Red Republicans to get their people through.
Team Red.
And so I am operating under the assumption that Team Red loses to Team Blue in November 2026, both the Senate and the House possibly.
Yeah, Mamdani is certainly giving us
which means that if Trump has anyone who needs to be approved on any of these supervisory or boards, it better happen before then. And so my thesis will be more validated if obviously Jerome Powell will be off the chairmanship in May of 2026. How do the elections go with these board governors and the district banks? Can he get Cook fired by that point? And so once he gets all these pieces in place, then I think it's going to be crazy nuts time.
Okay.
Because then, obviously Bessen's on board. Then you have the Fed. Now you have control of the banking regulations, so you can deregulate the banks. You have control of the mortgage market. So there's, I don't know the amount, but there's like something single digit or tens of trillions of dollars of home equity locked in American homes. And if you lower the rates, they're going to spend the money, especially if the federal government is underwriting these loans. So the housing market could be used to juice things even further. Again, you need control of certain agencies to be able to do this. I think by mid 2026, if we're going to get this money printing bonanza, Team Trump needs to have gotten all their people in place. Yeah. Because post then, I think it'd be very tough for them to, beat the Democrats just because people don't like him. Half the country hates Trump. And so what? Right. The thing's in the other direction.
Yep. That's the way the pendulum swings. What team are you on? We got Team Red Republicans, Team Blue Democrats.
I'm on Team Satoshi.
It's Team Satoshi. Let's go. Let's go. I'm on that team too. Let's go. All right. What else do you find most exciting in the space? Like you rip through these questions, which is great. I love having you on the show. It's always an absolute blast. What do you find most entertaining about the space, most exciting? Next time you come on, what do you want to talk? What's your next piece going to be about?
My next piece is going to be about France exiting the euro and a multi-trillion-dollar bailout by the ECB, and that's what I'll be speaking about in a few days at Toga 2049. So I am giddy with excitement that Europe is going to, I think, be able to unshackle themselves from the euro, because I think it's an abomination in terms of restricting the ability of the people to express themselves. And it's going to be quite interesting to see what the ECB does to try to forestall this situation.
Okay, so France unshackles itself from the euro. The rest of the European Union is still beholden to the euro.
Maybe not. Who knows? But from our perspective as crypto, what do we know when something systemically happens? We know the central bank print. So the ECB has not restarted quantitative easing because Christine Lagarde wants to control all of these national governments. And so her thing is, I am in control. I'm an unelected bureaucrat in control of the central bank. But you need my money to keep your bond yields in check, to fund your national deficits. So you do what I say, and you elect who I want you to elect. So Marine Le Pen, you go to jail. We don't allow certain politicians to succeed in elections because they would want more sovereignty for their state versus sovereignty to Brussels and Frankfurt. Mm-hmm. But France is broke. They're too big to fail, but too big to bail out. And so the French fiscal situation is such that I think it's going to force the ECB to print now or print later. Maybe the euro survives, maybe it doesn't. It doesn't really matter. I don't care. It's all Bitcoin doesn't give a fuck. But we know the ECB has to print. so that they can survive. Because if France leaves and if Germany leaves the euro, there's no more euro. And no more euro, no more ECB. And all those motherfuckers don't have a job anymore. So they're going to be maximum Europe to keep their own power. And to do that, they're going to have to print money. And so, but France is the linchpin that's going to force them to come back to the table and restart QE and print trillions of euros to keep themselves in power, possibly.
Okay. And so as France has to, they have, wow. Arthur, you break my brain, dude.
You have to read the essay or come,
I will.
watch a token on stage.
Man. Okay. All right. So they're going to have to print. Otherwise, France is cooked, but they have to keep France. They don't want France to go anywhere, and they want to keep their own jobs. So they have to print in order to control.
That's my thesis.
Yeah. Okay. Makes sense. I'll read the piece when it comes out. Thanks so much, man.
This is
Absolute
great.
pleasure. Yeah. Yeah.